SoFi stock dropped 11%. It's about midday on Monday. And the market's reaction has not been positive to the company's earnings, which came out this morning. But I think this is really missing the forest for the trees. SoFi continues to execute on everything that it's planning to build, expecting double digit into 20% growth over the next couple of years. Management is expecting earnings to grow 20 to 25%. So I'm going to get to all of the really important numbers, everything you need to know as an investor. I think the real story here is whether you're looking at short-term results and what the guidance was for the next quarter or two, or if you're looking at the long-term future for SoFi. I'm looking on that long-term side. Is this company going to be significantly bigger than it is today 10 years from now? That's what I'm worried about, not necessarily just one quarter or something like what are a couple of key numbers in each earnings report. I'm looking at that long-term trajectory, and I don't think anything has changed. In fact, it's maybe gotten a little bit better in the last few hours. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get right to the results. I'm going to start with the market's reaction because you can see here, stock's been all over the place, down significantly more than where it was. It's been down as low as $15.55, so that was the low for the day. But take a step back here. Over the past week, down about 6%. Over the past month, it's flat. And then if you zoom out to a year, shares are up 74%. So again, take that long-term view because I think that's really the key with SoFi. But let's get to these earnings results, and I'm going to use the presentation as kind of a guide here. I'm going to look mostly at these fourth quarter numbers. Record adjusted net revenue up 24% from a year ago, $739 million. Record adjusted EBITDA, almost $200 million. And net income, this is the fifth straight quarter the company actually reporting positive net income. And that was adjusted earnings per share of 5 cents. So that beat estimates, basically beat estimates across the board. And what we really want to see is growth in the number of members, as they call them, and the number of products that those members are using. So you can see that the year over year growth in 2024 was 34%. Now, that's slowing down a little bit, but you're going to expect that as you start to hit some sort of law of large numbers. Compound annual growth rate is 53%. Again, if this growth rate is in that 20 to 30% range, that's phenomenal for a company like SoFi. The number of products those members are using growing 32%. So solid progress on both of those fronts. But look at how much the company has changed over just the last few years. This chart shows the number of lending products. Remember, this is just the number of products, not necessarily the amount that's being loaned, but the number of products that's gone from 1 million to 2 million over the past 3 years. But the financial services products business has gone from 4 million to over 12, almost 13 million. So the company is becoming much more of a financial services company with money, Relay, Invest, and credit cards. These are all businesses that are not going to have the same stress on your balance sheet that you would typically have with a traditional bank business. I'll get to some of that, but really the trend over the past year is SoFi moving from being a bank and using its balance sheet to grow the number of loans, whether that's personal loans, student loans, or home loans, to being much more of a platform. And when I'm talking about the lending platform, I'm not actually talking about the tech platform. That's this right here. They talked a little bit about this on the conference call. There was a couple of deals, one with the government that they signed, and another one with another large institution. Those actually aren't going to hit the income statement until 2026, but it seems like we're starting to maybe get a little bit more momentum on the tech platform side. This is basically where you're going to white label the technology solutions for banking products. So physical card issuance, virtual card issuance, web and mobile banking. It's really the technology behind some of these products when companies don't necessarily want to become banks. So this is growing, but not growing at a massive rate, just 15% in the past year. However, when you combine financial services with the tech platform, which is the company is largely doing, I think it was 49% of revenue in the most recent quarter was from these two products. So this is becoming much less of a company reliant on the lending business. Now, the big change over the past year is the way that SoFi is looking at lending. And again, this gets to the debate of, is this a bank or is it a technology company? And I think the argument for this being a technology company is they're really shifting from using loans on their balance sheet. And they use some examples of their loans here, but this is the kind of things that they would put on their balance sheet. These first three, personal, student loans, and home loans, would be from the lending segment. The credit card business, which is denoted in C here, is actually from the financial services segment. But then you may sell some of those loans, so offload some of that risk to investors, may do securitizations, secured financing. The big change over the past year is their loan platform business. This is going to be where they're not actually putting these products on the balance sheet. They're just facilitating the loan. This becomes a fee-based business. So they did a $2 billion deal that they announced in the fourth quarter. They actually announced a $5 billion 2-year deal during this conference call for the fourth quarter of 2024. So this is really a business that's scaling. And Anthony Notos even said on the conference call that this could be something that allows SoFi to basically get out of the business of having loans on its balance sheet. So if we start to see more than personal loans, and you start to see student loans, home loans, the credit card lending. I think all of these things could potentially be part of this loan platform business that gets us to much more of a technology business, much more infinitely scalable, and you're not as reliant on the growth of your balance sheet. And that's really the limiting factor for most banks is what kind of assets do you have on your balance sheet? What are your risks? What are your default rates? You're taking bank-like risks. This is not bank-like risks. This is platform-like risks. So much more technology-like, and I think that's going to help push the multiple higher because it allows the company to grow faster. Now, this is a look at their original guidance and then also their updated guidance. You can see that they even beat these numbers. So again, the reason that I'm showing this is that when you look at the 2025, 2026 guidance, which I'll get to in just a second, Anthony Noto and team typically underestimates their guidance. So they want to underpromise and over-deliver. 26% growth, earnings per share of 15 cents, tangible book value growth of $1.4 billion. That's now almost $5 billion on the balance sheet. So all these things trending in the right direction. So here's that fiscal 2025 guidance, including the first quarter numbers. I'll start at the top here because the most important is the big numbers for 2025, expecting 23 to 26% revenue growth, adjusted EBITDA, margins expected to be 26%, and then earnings expected to be 25 to 27 cents with tangible book value growth of 550 million to 575 million. Again, I think that's probably on the low side because that's the way that Noto and team typically guide things. And then these are the numbers for the first quarter, 25 to 28% growth. Again, high growth company. If you are a technology business or a bank, growing in the mid 20% range is really phenomenal if you can do this year after year after year. And that's where some of the comments that were made about 2026 and beyond were extremely important. I'll get to those in just a second. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So the next thing I'm going to do is look at some of the transcript. This is already out on FinChat. And a couple of things I want to highlight. The first is our loan platform business recently agreed to initial terms with Blue Willow Capital Funds for up to $5 billion of personal loans over the next 2 years. Again, this is one of those deals that's going to make this much more of a platform business. I showed the 2025 guidance, but just look at these comments going out even further than that. Looking beyond 2025, we now expect to exceed our medium-term guidance of delivering 20 to 25% compound annual revenue growth rate through 2026 and remain confident in delivering 2026 earnings per share in the range of 55 to 80 cents. Moreover, we're well positioned to deliver 20 to 25% annual earnings per share growth beyond 2026. So SoFi, in a lot of ways, seems like an expensive stock, but when you look at this 2026 estimate, let's take this high end, 80 cents per share. At the current stock price, $15.85 as I'm recording, that means that the 2026 multiple is just 20 times earnings, slightly less than 20 times earnings. That's not too bad for a company that's growing in excess of 20% per year. I think this is where you get the long-term value for SoFi. And the opportunity for investors is this short-term unknowns. What is each quarter going to look like? I don't necessarily think that really matters because long-term, this is a company that's going to be a much more profitable business, much bigger business, much more of a platform business, which is going to be high margin. That's exactly what I want to see. So the market is obviously selling off shares, but let's look at the forest for the trees. I think this is really the most important thing with a lot of these companies going to be reporting over the next couple of weeks. Not just what does one quarter look like, but what does the long-term trajectory look like? And for SoFi, everything is moving in the right directions. Members are flocking to the platform. They're using more and more products. And SoFi is able to increase the size of that platform and offer more solutions for more and more people. They got into commercial products in the most recent quarter. They're adding alternative investments. Anthony Noto talked about moving more and more into crypto if that is allowed from a regulatory standpoint over the next year or so. So I think there's a lot of growth momentum for SoFi. The sell-off maybe makes sense if you're starting to quibble at one or two of these numbers in this quarterly report, but look at what the long-term trend is. I think SoFi is very, very well positioned. Any sort of major weakness in the stock, I think, is a great buying opportunity. I haven't added shares of this recently because I don't think we're quite at a no-brainer price yet. But if the stock continues to fall, we get closer to $10 a share, I think this is going to be one that I'm going to be picking up more of. So check back here. I'm going to have more as we kind of have some time to process these results. I'll be back later in the week to talk a little bit more about what we've learned from SoFi, not only in this quarter, but also how it compares to some of their competitors. So subscribe here on Asymmetric Investing for more. Let me know what you think about the quarter at SoFi. Thanks for watching, everybody. See you here next time.